Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian stock market set for a flat start ahead of key earnings. December. TCS and Infosys are likely to kickstart December quarter earnings. Weekly expiry to wide. Trend on GIFT Nifty indicates a flat start coming in for the last street, and US market ended in higher at close of trade. Dow Jones Industrial averaged up to 0.45%. Asian shares, they've been trading higher ahead of US inflation data that could influence the Federal Reserve thinking on rate cuts. FIIs, they've sold shares worth around 1,700 crore, and DIIs have purchased equities to an extent of 2,080 odd crores. Results that we need to watch out for, of course, it's going to be the big boy TCS along with Infosys, which will be reporting in their December quarter earnings. HDFC Asset Management Company too will be in focus ahead of quarterly earnings. Talk about FNOQs. FIIs have been the net sellers in index futures and also been the net sellers in Nifty futures overall, Bank Nifty futures too. And add to the mix is Bank Nifty and Nifty options per se. That's an interesting data that you're watching out for. But FNO ban. What is new in the ban is Indus Tower, PVR Inox and Z Limited. What still remains in the ban is Balrampur Chini, Chambal Fertilizers, Escorts, REX, India Cement, National Aluminium Company, SAIL, PEL, Bandhan Bank, Hindustan Copper. What comes out of the ban is Delta Corp and GNFC. Talk about option Qs there. Nifty PCR now has indicated is inched up above that one level. Currently stands at 1.06 versus 0.88. But let's get going with strategies, level and top recommendations of the day with Chandan Taparia, who heads the derivative and technical research at Motilal Oswal. Chandan, good morning and thank you so much for joining us. It is a weekly expiry. What is the trade setup looking like for you, and also the immediate support and resistance level for Nifty and Bank Nifty along with the strategy for the day?
Good morning, Nickey. Thanks for having me.
Pleasure.
So we have seen a soft opening in the market, but Nifty managed to hold 21,450 and witnessed decent recovery in last hour of the session. Somehow supplies visible, upside is kept, but even after their declines are being bought, which clearly indicates the trend is intact even after a strong run-up in last 10 weeks. So some sort of consolidation is clearly visible, but the good part is every meaningful decline is being bought in the market. Yesterday, it managed to surpass an immediate hurdle of 21,540, and I believe that today, if it manages to hold 21,550, then this run-up can extend towards 21,750 to 21,850 zone. So broader range for the index is likely to be in between 21,400 to 21,850, but in between, during the day, we have to use the support of 21,540 to play the upswing towards 21,750 marks in Nifty index. Now talking about Bank Nifty index, Bank Nifty yesterday opened soft but managed to hold key support zone. We have multiple support at 46, 750 and 47,000. So we believe that with support of 47,000, your banking index can bounce towards 47,750 to 48,000. So both the indices have taken support. Consolidation of last couple of days seems to getting over, and a small follow-up could drive the next leg of rally. Now talking about Nifty index, today is the weekly expiry and the volume weightage average for the week is 21,620, and we are hovering near its volume weightage average. So because of that, it's likely to witness buy on decline, but upside is likely to keep. So 21,540 to 21,750 is the range. We'll play with slightly positive bias in the Nifty index.
Chandan, I'd want to chat about Coforge. Essentially, Morgan Stanley has initiated an overweight call on that one, and it's called the company as the preferred mid-cap IT pick. I'm sure, we're going to be marking in the December quarter earnings. But before that, which of the stocks do you feel should be watched out for from the technical levels? And does Coforge actually fit the bill given the risk-reward ratio?
So Coforge's major trends is intact to positive. We have seen some profit booking decline in last 3-4 weeks. So multiple supports are visible near 6,000, and because of that, it can head to our 6,400 level. But if you want the other name, then I'll go with Bsoft. Bsoft is one of the strongest name, and it has It is all set to give the fresh rally after the decline of last 2 weeks started to form higher lows. So with support near 730, with support near 725, you can see an up move towards 775 in BSOP. So we like Coforce, but BSOP looks more positive and clear relative outperformance visible in the counter.
I want to talk about Bharti Airtel. There are a couple of brokerages report typically on the telecom stocks, and HSBC has gone ahead and downgraded Bharti Airtel. The target price, however, has been raised a bit, 1125 from 1020 odd level. It speaks about ARP is set to rise, but sees the market share gain in mobile. Overall, stock appears to be fair valued and pricing in the benefits of mobile tariff hikes and lower capex intensity. But on back of that, what are the charts indicating? Do you see an upside?
Yeah, major trend of the counter is positive and Bharti is forming a higher base. So with support of 1040, somehow we are expecting 1095 to 1100 zone in Bharti Airtel.
Right. In that case, let's just talk about the markets open. Chandan, I'm going to get back to you in just a jiffy. We're looking at gains to an extent of 0.5% out there for Nifty 50, 21,700 mark. It is a good start, fairly good start coming on in the markets. Do bear in mind the fact that it's also weekly expiry and not just the kickstart of the December quarter earnings out there. It is a fairly decent start coming in for the markets. Bank Nifty, let's pull that up for you just to see where the momentum is building up. And we're looking at gains, perhaps a bit of outperformance coming in from Bank Nifty index, mid cap and small cap index. Let's pull that up for you. Well, just to see if there is a level of outperformance and the trend there remains intact. Let's also look at TCS and Infosys today before we kind of go on to addressing the other top gainers and the top losers, along with the entire IT pack, right? Infosys, well, a bit of losses coming in there. It is the December quarter usually is a soft quarter on account of the holiday season in North America, and this quarter it's not expected to be any different, be it for TCS, be it for Infosys. So any kind of positive surprise is something that we like to track for. TCS at this point of time is looking a bit positive. Well, also let's look at Nifty IT index because that's where the traction is going to come in from. Or let's just say it's going to be in focus for a couple of days. 0.1% of gains clocked in for this one. Relatively flat start with positive buys. Let's pull up top gainers and the top losers before we navigate our conversation back to Chandan Taparia. Well, Hero Motor Corp, Eicher Motors, Axis Bank. These are some of the top gainers that we have. Tech Mahindra, Coal India and Bajaj Finserv. These are other top gainers that we have on the screen right now for you. Top losers, let's look that up. Well, Hero Motor Corp, we get to update that list, but do bear in mind the fact that auto stocks have been doing extremely well, and IT at this point of time is pretty much flat, I would say. Not a decisive start coming in for the IT basket. Advances 46, declines 4. So clearly, it is a good start coming in for the markets. Chandan, coming back to you, what do you make out of this positive start that we're looking at? What is the strategy you think now the investors can, perhaps traders can adapt to?
Yeah, as I mentioned, that we'll go with now positive bias as consolidation of last couple of days seems to getting over. So I'll use any small decline as a buying opportunity with major support of 21,540. I'll look for 21,850 now. Earlier, I was talking about 21,750. So positive start and positive start along with consolidation, which is getting over, indicating fresh leg of rally. Talking about Bank Nifty, we just need a hold above 47,500 in the scenario. It can head towards 47,750 to 48,000. So positive bias with buy on decline could continue. Stock wise, already I mentioned about BSOFT and few IT name. We can also focus on the real estate counter and all in the market.
Really, the strategy that Chandan has suggested. Well, Chandan, a couple of brokerages have perhaps hinted at being a bit cautious right now on the markets. You think it's fairly, right now it's the time to perhaps sit a bit on the cash and then initiate the kind of longs that otherwise would have been initiated on the blue chip counters or on the counters where risk and reward ratio was a little better. What's your assessment on the markets right now?
See, my assessment is trend is intact and many people are having FOMO. And because of that, I don't think market will see any major corrections. Forget about correction. Market is not ready to dip by more than 300, 400 points. Even it has formed slightly negative pattern and witnessed some sort of negative divergence, but just I think selling happens for 1 or 2 days and then market witnesses recovery because liquidity is chasing the market. DIs and FIs, DIs and SIP flows are really working well. So I don't think as of now we need to worry. We just need to look at the trend. Trend is intact. Till Nifty doesn't break 21,200, 21,300 zone, this trend is likely to intact and we have target to us 22,222 in the Nifty index. Similarly in the Bank Nifty, till it holds above 46,750 zone, it has positive potential for a rally towards 48,500 zone. So we will be with major trend, and the good part is selective heavyweights, which were earlier not performing and contributing a lot, including Reliance and few IT name or Axis Bank, started to be into the party. So I think market has limited downside. Utilize any volatility or decline as a buying opportunity. Be with selective ideas, and this is what you need to be with Indian markets.
Chandan, the gains have been led by the rate sensitives in today's state. Despite it being a day of IT sector, we are looking at gains coming in from auto and banks put together. Hero MotoCorp, Eicher Motors, Axis Bank, Bajaj Finserv. Of the four, which charts look better according to you?
Yeah, so yes, I think you mentioned four biggies. Bajaj Finance consolidation of last 5-6 days seems to getting over. So this stock was earlier not performing, but now started to hold. So with support of 7,600, here you can target towards 8,000. Talking about Hero Moto, this stock is really doing well. A slow mover, lower beta, but really has done well all the way, really from 3,000 to 4,200 plus, making higher tops, higher bottom. With support of 4,050, it can head towards 4,500 level. I don't know whether you ask about Reliance or not, but Reliance is all set to head towards 2720, 2750 zone. And I think there is going to be the new lifetime high record for Reliance industry.
I'm not asking you about Reliance per se, but definitely I'd like to ask you about Network 18, because that's the counter which has witnessed a lot of gains coming in on that one. Do you think more steam left to the rally?
Yeah, you guys are doing a great job. So that is clearly rewarded in price pattern. And in fact, Nifty Media has given a major breakout. So I have positive on all media counters, whether you talk about Network 18 or TV 18, whether you can look at the price pattern of NDTV. So all the media stocks are doing well. And when I talk about Network 18, the stock has given a major consolidation breakout. The major breakout happened above 100 levels, and above 100 it just rallied by 25% in just few hours. So positive sentiment is likely to be there. We have higher base at 121, and with that 121 base, it has potential to rally towards 135 to 140.
Polycap is another one which I wanted to chat about, Chandan. A bit of rubbing that has come through, a bit of news that has come through, of course, rumors that have been refuted, further claims that have been made, and of course, bunch of research reports that we're looking at. Net, what is the chart looking like?
I missed the name.
Polycap.
Okay, Polycap. No, I don't want to comment, and I want to miss the name because the structure is totally negative. Especially when market is holding, this stock is not doing well, making lower top, lower bottom. And if I look at the daily chart, it has completed a negative inverse head and shoulder pattern, and head and shoulder pattern is a negative price pattern, and this pattern is happening when market is heading towards new high territory. So I think let's avoid it. Let it go to 4,200 or 4,150. So as of now, avoid or continue with your short position if you are having. If you got stuck, then buy the put and hedge your position as of now. And I think once 10% circuit opens, it can further correct by 5 to 8%.
All right, Chandan, we'll leave it at that. And thank you so much for taking out the time and having this conversation with us. All right, about time we address in the stocks and news. Morgan Stanley is the first one which I'd want to take up. There is an initiation report, of course, which has come in on Coforge by Morgan Stanley. Of course, we highlighted that the company is the preferred mid-cap IT bet by Morgan Stanley. It essentially has spoken about the company's scalability, which can keep in the revenue growth profile higher for longer as compared to peers, and also the uptick. Essentially, the company is delivering on the growth aspiration faster than currently expected by the market. That is also one thing which is working in the favor of the company. Another one that I'd want to talk about in stocks and news typically is HSBC on Bharti Airtel, where there's a downgrade which has come through. And however, ARPU is set to rise. They see the market share gains in mobile. The target price has been revised higher to 1125 as compared to 1020. It says that benefits, pricing in benefits from mobile tariff hikes and lower capex intensity. Bharti Airtel right now is doing extremely well in trade. Also, let's look at Phoenix Mills, where the company has reported in 24% of YOY growth in total consumption. On like-to-like, the consumption has grown in by 4%. The gross retail collection stands at 700 crore in Q3 and has jumped by 30%. Let's talk about Bank of India too. Well, Phoenix, if you look at the uptick there, it's a 0.5% of gains coming in. Overall, for the banking sector, it's a good day. A few banks are also, Axis Bank, SBI, they're doing well. Of course, updates coming in from Bank of India, where the Q3 deposits have jumped by 9%. Deposits overall are up by 9% too. On domestic front, the total deposits have increased by 7.62%. So that's the update that we have when it comes to Bank of India. The entire financial pack is doing extremely well. But that's what we have in terms of stocks and news. Of course, a downgrade which is coming on GAIL. That's another one that remains to be highlighted. CLSA has downgraded the stock to underperform from buy and sees limited re-rating room and subdued EPS growth for GAIL. A bit of negative development coming in on this. Clearly, you can see that knock coming in. Remains to be seen if the losses can further enlarge from this level. But that's that when it comes to the entire stocks and news. But next we have Chetan Thacker, the Senior Vice President, Portfolio Manager too from ASK Investment Managers. Morning there.
Morning, Nickey.
All right, I'm going to start off by first getting a basic perspective of what do you think should one be a little more cautious at this level in the run-up to important events? Or you think it's a market where the first half is expected to be decent enough, a good gains coming in for the markets, and the second half could be lackluster? What is your key assessment for 2024?
So for 2024, our sense is that as we move along, you will probably see more traction in earnings growth. That will start to happen. And over there, what we believe is domestic is expected to pick up in terms of volume. I think Q3 will probably show that certain pockets on the discretionary side have started to accelerate as far as volume growth is concerned. But the recovery has been a bit patchy. So our sense is as we move ahead into the calendar year 24 and fiscal year 25, you will see domestic also gaining steam. Apart from that, I think exports has been a weaker patch this fiscal. So the assessment there is as we move ahead into the next year, you start to get growth coming in from exports as well. So overall, as we inch ahead, our sense is volume growth continues to pick up steam from here on. And in the very near term, obviously, the market will respond to the earnings that are likely to flow through in the third quarter. We have a key event that is placed in May of this year. But earnings recovery is expected to happen through fiscal 25.
Sure. I want to chat about what do you make out of typically the IT theme. I'm sure you have a bunch of themes that you've mentioned in a big report that you've laid out for the year 2024, and we are going to get on to that in just a jiffy. But before that, I'd want to chat about the entire IT pack. December quarter is technically a weak quarter, which is essentially marred by the holiday seasons that we see in North America and other globe. Of course, what do you make out of both the TCS and Infosys will be reporting in the numbers within the IT basket? Which counter you think would be a big disappoint or a drag, and which particular company you think would be a bit of a surprise in terms of the earning bits?
So clearly the large cap IT names will see subdued performance. Like you highlighted, this is seasonally a weak quarter. Apart from that, what we've essentially seen is that the nature of the deals have also shifted over the course of the last particular year. So the assessment is constant currency growth there will remain muted in Q3. Having said that, I think there are pockets which should do well, particularly on the ER&D side. Our assessment is anything which is exposed to auto, because that is where we are seeing a great degree of transition on the energy side. So there our assessment is growth will continue to remain strong, even on the constant currency growth basis for this quarter. So there will be these select pockets where our sense is growth will remain higher, ER&D being one of them, and certain few select mid-cap names. But per se, as a pack, our assessment is revenue growth will be muted. You'll also see some degree of impact of wage revision in certain names. So that will essentially mean that margins also will have some degree of cap as far as expansion is concerned. So per se, as a pack as a whole, pockets of positivity, but overall you will still continue to see subdued numbers.
All right. Apart from that, of course, let's chat in about the themes that you're pretty bullish on in 2024, manufacturing being one of it, of course, and financials being also the one that we need to talk about. But typically in the pecking order, the themes that you'd like and why.
Yes, so like you rightly pointed out, we've got that out on the report that we've released. Manufacturing is clearly one theme which we believe is here to stay for a longer period of time. And there are a couple of reasons why we strongly believe that manufacturing will continue to gain traction. What we are witnessing right now clearly is an acceleration in growth driven by the reforms that the current government has undertaken over the course of last 6 to 7 years. That has essentially fairly and squarely put manufacturing at the centerpiece. What it has essentially also done, given the geopolitical environment, is that it has made India a very attractive destination as far as shift in global supply chains are concerned. So we are actually witnessing a strong tailwind. Our expectation is, given the large size of the Indian market with 1.4 billion population size, and the fact that we are essentially seeing a rejig in global supply chains, the opportunity is there for the country to just grab it with both hands and deliver as far as acceleration is concerned. We've also seen a fair degree of policy support by way of PLI, or be it the lower corporate tax for newly registered manufacturing entities. I think that clearly will provide support to the industry to build economies of scale over a period of time so that they can compete globally as well and emerge as a destination as far as manufacturing is concerned. So clearly that is one pocket where we believe earnings tailwind will remain higher for a longer period of time. The second bit is on consumption. In consumption, our assessment is the discretionary bit of consumption will do well over the more medium to longer term, because as the country gets richer, you will essentially see consumption patterns changing. And discretionary bit of consumption is where you have story of both penetration-led growth and premiumization that will play out. So our sense is in consumption, we would prefer consumer discretionary names where we expect growth to remain higher for a longer period of time. On financials, very clearly, our sense is as the country obviously gets richer, leverage is lower in the system. You will see leverage increasing there. That in turn will mean that earnings growth will follow there. The key factor always to keep in mind on financials is to get the metric right as far as the underwriting capability of entities is concerned. The opportunity size is large. As a country, the leverage remains lower. So as we grow in size, the expectation is earnings growth and loan growth will start to inch higher, but we need to be focused on names where underwriting capabilities.
Sure. Apart from that, I'd also want to chat about financials per se. That's the particularly packed, which is a lot of hopes are perhaps building in on the fact that private sector banks this time around would be able to outperform given the lackluster performance that we've seen in the previous year as compared to the PSUs. With respect to that, if you just check the valuations, I'm sure you would agree that private sector banks, despite the underperformance, still kind of command a very premium valuation as compared to their own historical averages. Within the space of PSU and private banks, what do you like? And also if you could name out few picks within the large cap bets, if you have any in your mind.
So we won't be able to give any stock specific information there, but overall in general, our sense is what we witnessed last year, particularly on the PSU side, is the fact that we saw a faster normalization of ROEs. And that is why we saw the kind of performance that we've seen on PSUs, and we've seen normalization of ROEs there. As we look ahead, I think irrespective of whether it's the private or the public sector, the focus will clearly shift on ability and capability to drive growth for a more medium to long-term perspective, an entity which can deliver that, keeping the underwriting discipline in place. Our sense is those names will continue to do well, and it's not necessarily one against the other, but anyone who shows these characteristics will continue to do well. Yes, on the private side, I think their valuations were higher compared to the public sector, and hence we've seen a sharper up move on the PSUs as the ROEs have normalized. From here on, the equation will clearly shift back to how growth gets delivered from a more medium-term perspective.
Sure. Apart from that, any other theme per se that looks interesting to you?
So I think broadly our assessment is that manufacturing is clearly a theme. Manufacturing itself encompasses a lot of things. Even within capital goods, our sense is as capex continues to happen, as the government continues to build infrastructure in the country, we've seen a rapid pace of implementation over the last 7 to 8 years. We still have a long way to go. So anything which is linked to that will continue to do well. Anything which supplies to the capex directly or indirectly will continue to do well. Consumer discretionary should do well, and financial should do well.
Okay. This is going to be a little more from the shorter perspective, and still for the benefit of viewers, I'd want to ask, one is Gujarat, vibrant Gujarat theme, and of course the second one is the Ayodhya. They are big events essentially which we are looking at, and there is a lot of investment theme per se which is circulating around that. You've seen some event management companies like that of Privek also doing exceptionally well. In light of that, what do you think are the sectors or the themes that really one needs to eye in the run-up to the key events?
So I think Vibrant Gujarat is an event that was very successfully launched by our current Prime Minister. We've seen kind of commitments that are coming in. Our expectation is, given how we expect manufacturing to play out, you will see a lot more of these investments happen across a lot of industries. The focus clearly is on getting backward integrated across a lot of crucial industries. That means that capex intensity will remain high, and Vibrant Gujarat is a clear example of how things are likely to shape up as we move ahead into the future. As far as the Ayodhya event is concerned, I think if we just zoom out a bit, very clearly what has happened is a lot of these crucial places have become a tourism destination. And our sense is that is another pocket that should do well as the country grows richer. Tourism will do well over a period of time, and there will be themes that can be played there.
All right. The last question that I have for you is a little broad-based in nature. Essentially, 5 things that you think can lead to momentum for the markets, at least in the first half, and of course, your wall of worries for a market like this.
So I think on the domestic side, clearly monsoons have been a spoil sport thus far. That has an implication as far as food inflation is concerned. So we are keeping a close eye there, because that is something that can put pressure on consumer price inflation in the very short term. Keeping fingers crossed that next year we have a better monsoon year, so that takes care of this particular worry. Second bit clearly is what we are witnessing on the global side in terms of the geopolitical tension. For us as a country, clearly energy is one sector that gets impacted whenever there are such kind of shocks that play out in the system. What we are currently witnessing, particularly on the key shipping routes, that means that freight cost can also turn out to be a near-term worry in an environment where exports continue to remain weak and the demand there is still weak. So that is another added set of worry as far as the global events are concerned. So we are keeping a close eye there to see how inflation behaves in the very near term. If we see a positive side playing out there next year, our expectation is there is a fair degree of pent up in the system. So suddenly that worry becomes a tailwind as far as growth is concerned. Similarly, on the geopolitical side, just monitoring things and events as they are happening.
All right, that was pretty summed up and sharp response there, but we're just going to leave it at that. And thank you so much, Chetan, for taking out the time and having this conversation with us.
Sure, thank you. My pleasure. Thanks so much.
All right, let's actually also talk about Polycap. And if we can pull that up chart, it's an interesting one. We're seeing another knock coming in for 10% for Polycap. Now, there was a PIB article which suggested that from the source, of course, that the management is likely to, management is again likely to reiterate the investors denying everything. Of course, there were claims that were made by the department, income tax department, and irrespective, now brokerage Nuvama suggests that the findings eventually will come out, but there is expected to be a medium-term impact or a de-rating on valuation, which had any which ways expanded to 37 times through the course of calendar year 2023. That's one thing that we need to watch out for. But look at the losses for Polycap. Another 15% lost on this one. So clearly, the issues or the worries surrounding around Polycap is escalated at this point of time, and this is a counter that you need to keep a close eye out on. But that's all that we have in this edition. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the days, stay tuned into moneycontrol.com and Moneycontrol app.